Hello and welcome to the show. I'm Puneet Wadhwa, and today we have with us Ajit Mishra, Vice President for Technical Research at Religare Broking Limited. Hello, Ajit, and welcome to the show.
Thanks, Puneet. Thanks for having me.
The markets have been stuck in a range. Do you see a breakout on either side anytime soon? And what are the key levels for the Sensex and Nifty you are watching out for?
So that's true, Puneet, that it's almost a year now that we are seeing the market is hovering in our broader range. But off late, we are seeing a bit of a sign like wherein we can see that this recovery, this consolidation may end. But for that, we need 18,200 on Nifty and close to around 61,700 in the Sensex to be surpassed decisively. Otherwise, we may again see some profit taking and consolidation in the near future. But midterm outlook looks slightly on the positive side as long as we are holding 17,200 mark. So broadly, if you see that 1,000 point kind of a range, 17,200 to 18,200 in the Nifty, and 400 to 61,700 in the Sensex is what we believe that markets likely to trade from the medium term perspective.
So, from a broader perspective, do you think that the bull market that started somewhere in April, May 2020 is over now? And what is the overall structure look like?
So it's more of a consolidation because if you remember that the kind of recovery that we have seen, or a surge that from the March 2020 lows, it's obvious that market spend some time to digest those gains. That is what we are seeing. So it's not that the long term trend has changed. It's just that markets are digesting in, and maybe in the latter half of this year we'll see that the resumption of trend possibly on the positive side.
So, how do investors navigate this March quarter result season that has begun, last week? What should their market strategy be? Do you recommend buying the dips or selling the rallies?
So definitely, when it comes to market overall, it's a buy on dip market, and as you said that we are eyeing 18,000 plus zone of late. So above 18,200, in fact, the buy is going to change from the medium term perspective also. So it's a buy on dip market, and I feel that, despite being a buy on dip market, stock selection, sector selection is very critical.
Within the broader framework of the Sensex stocks, there's a wide difference. I mean, there's a lot of difference in which how the stocks are performing. On one hand, we have stocks like RIL, which were close to their 52-week lows, and on the other hand, you have stocks like ITC and L&T that are trading close to their 52-week low highs rather. What's your strategy regarding, let's say, RIL, L&T, and ITC?
All eyes are on Reliance now because other sectors they have performed well, especially wherein we have weightage like financials, banking, ITS is trading subdued, but all the other sectors are pitching in. So Reliance, it's almost 1.5 years now that we are seeing this range 2150 to 2750 levels, and we are closer to the lower band of the same. So as of now, indications are in the favor that the negative tone or sideways tone will continue until we decisively break 2450 levels on Reliance and sustain above the same. So maybe post numbers, we might see some trigger, but as of now, there is no indication. So from an investor perspective, I would feel that if your view is, let's say, medium to long term, then you can start accumulating this stock, around the current levels because we have already seen decent correction. When it comes to ITC and L&T, they are definitely, outperforming the large cap basket, and they are holding strong. So we feel that L&T, ITC, one should maintain longs position. 2450 to 2500 is a short term target for LT, and we are eyeing 400 plus zone, in fact 420 plus zone in ITC, and any dip in ITC can be considered as a buying opportunity as long as it's holding above 360 levels.
Are there any mid and small cap stocks that you have on your radar?
So yes, we have like a few names like AB Capital, wherein we are seeing strong, consolidation happening after a long consolidation breakout. So it's a very narrow range consolidation. So we believe that there's a possibility that we may see next leg of up move soon. Then we have stock like Exide Industry. As a disclosure, we have recommended to our clients also off late, and we are eyeing close to around 210 levels. Then we have Reddington, again from the mid cap basket, wherein we are seeing, positive tone continuing. Then we have Manapuram, and lastly on the list, NCC.
So, what is the kind of upside one can expect in these stocks that you mentioned? Any broad range that you'd like to specify?
Yeah. So, in case if the view is short to medium term, we can anticipate like in 10 to 15% kind of a uptick in next 2 to 3 months.
How should investors approach the banking and information technology stocks now?
So banking is something which is helping the market to recoup the losses. In the recent past, we have seen that all recovery which we have seen from the recent bottom, banking and financials were on the front foot. So we believe that this tone should continue from the medium term perspective also. As long as we are holding 39,300 in the banking index, one should continue with the positive bias. IT, on the other hand, slightly on the back foot. So with IT, especially the IT majors, HCL Technologies looks comparatively stronger. Rest of these stocks are still hovering in a range.
Skymet and the IMD differed in their forecasts for monsoon this year. How should one approach the consumption theme, FMCG, consumer durables, discretionary spending, etc., in the back of these developments?
So interestingly, that FMCG as a sector is trading at the record highs. And if you have noticed that stocks like ITC, HUL, Britannia, they have done pretty well of late. So yes, selectively one can continue to look at FMCG as a basket and utilize this, positive momentum to continue with the positive side. But yeah, other themes like discretionary spend and consumer durables, there we are seeing more of underperformance. So be it Voltas, Whirlpool, Jubilant Food, these stocks are not participating in the move yet. So for a time being, yes, one should avoid these stocks in case if the view is very short term. But from the medium term perspective, we feel that stock like Voltas is a good accumulate. And similarly, Jubilant Food also, like if it corrects 5-10% from the current levels, it's a good buy.
One last question about the new age companies, the stocks of the new age companies, something like Zomato, Nykaa, Policy Bazar. They have completely fallen off investors' radar. Are they a good bet right now from a year's perspective, or should one stay away?
So, post listing, we all know the kind of reaction that these stock had for almost a year or two, and now we are seeing a bit of a recovery in select names. So, Paytm, Policy Bazar, we have seen a gradual recovery, but will this recovery sustain is something that is very difficult to answer, considering that still the earning is something which holds the key. So as of now, I feel that comparatively, yes, these names like Policy Bazaar, Paytm, wherein we are seeing a bit of sustainability, but rest of the name is something that one should avoid, in case if the view is short to medium term.
Thank you so much, Ajit, for your time today. Would you like to give us any disclosures about the stocks in the sectors that we've discussed?
Yes. So as a disclaimer, I'm personally not holding any of these stocks, but our clients may have position.
Thank you so much.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.